All right, it's the 29th of October 2024. I hope I'm audible. Yeah, I think everything's good. Um, yeah, just a second. Okay, yeah, 29th of October 2024. We've got about 30 minutes to the New York Open. We're going to get to the charts, do our analysis as usual, and check if we have any, and see if we have any trading opportunities for the first 2 to 3 hours of the New York session. Okay. Um, just want to see if everything's fine here. Yeah, all seems to be good. All right, let's get to the charts. Okay, so this is the daily time frame. Now, uh, it's still ranging. We're still ranging between 2750 and 2722. So we have weekly support at 2722, and there is like a weekly resistance area that has formed now at 2750. So we did touch it today. We had taken a trade yesterday with TPs around 2747, 2750, and we did touch, and it did hit our final TP at 2750. Um, yeah, so we are still ranging. So since last Monday, we've been ranging in this area, right? Since the 21st of October, we've been ranging. This week is an important week. It's NFP week, and next week is election week. So there should be some volume this week. Next week, I won't be trading, as I said. I'll be probably doing the live streams, but I won't be trading because um, uh, you might you might not get filled in on orders, or not, you might not be able to close orders. There might be slippage, so I don't want to get caught in the middle of all of that. So I might not be trading next week, but I probably will be here posting the analysis for the New York session. Okay, so that's the daily time frame. We're still trying to close above 2750. We've tapped it. We've tapped this high, this previous high here at 2758. We've tapped that high already. Um, if you break that high, if you close above that, we should head higher. And the next psychological number is 2800. Okay. So let's get to our trading chart. Now, before I do every day, before I draw the zones for the day, I always do a recap of what happened the previous day. So previous day, yesterday, we took a buy trade here. I'd given out the price levels around 2731.9 was the entry, and price did a bit it did touch that area. It came a little lower as well. Stop loss was about there, 27.8, so that was about a 40, just about a 40 pip stop loss. And TP was, first TP was 2747 or 2748 there. That was a 150 pip move, and then I had my final TP at 2750, which got hit today, right? That's why you see these gains today here, because that TP, the final TP, hit only today during the Asian session. So that was yesterday's opportunity. Let's clean up the chart and start this whole process all over again. These are sell levels that I had given out as well. These green lines are sell level 2755.8. This was there yesterday and even on Friday right here. And you can see how price tapped it. So the stop loss would have been there, just there, 18, 19 pip stop loss, and price dropped about 90 pips, right, in the Asian session. I don't trade those hours, so but I do give out these entries in case you do trade those hours, the Asian or the London. You can watch how price, you can either place pending orders there and wait, or you can watch how price reacts to those levels and take trades with a tighter stop loss. Okay, so let's get rid of all of that because all of those levels are tapped now. Okay, that's the reason I'm deleting all of it. Let's get rid of this. Let's get rid of our support resistance levels also. tapped all of that. Sorry. Okay. Okay, this should be good. Before we draw the zones, just look at the news calendar. So there is no real news today. This is at 7:30. Don't worry about that. That's not going to do much. If there is a push at around 7:30, that'll be because I'm sorry, it's not 7:30. At that time, that's my local time. Yeah. So at that time, if you do see a push, that'll be because the new 4-hour candle open. It'll not probably be because of this red news event. These news events don't move price at all, right? Even if they do, it's because of the 4-hour candle, the previous 4-hour candle closing, and new volume coming into the market with the new 4-hour candle opening, right? So there is no news today. So it should be a regular trading day today. Okay, so this is a range of about 250 pips. I think that's good. Price has tapped this area, but this level is still valid, so I'm going to leave that as it is. Let's start here. So there is a demand right here. Okay, so this is a rally. These are two basin candles and a rally. Okay, rally, base rally. That's a H4 demand level right there. Okay, further down to the left, there is this. There's a drop here, right? There's a drop. There's an invisible candle here because of the gap. So there is after price closed here, it dropped all the way here, right? 120 pip drops. There is a invisible bearish candle there, and there are there are three basin candles. So that's a drop, three basin candles and a rally. Drop, base, rally, right? So that's the next demand level right there. So I'm going to extend that here. That's the next demand level there. Now you can take this area, but the reason I'm taking this is because all these candles are side by side, right? So that's one base. It's a fairly large base, but I have to include that because all these three basin candles are side by side. They're next to each other, right? They're within the same range, all three candles, more or less within the same range. And then we have the leg out. So the drop, base, and then the rally. Okay, so those are the two demand levels that we have. So this is the closest one for the New York session. We're going to keep that label there. And then let's look at supply. Supply, we've tapped deep into this level, right? Tapped all the way there. We've gone above this. We've gone above this liquidity candle. So this light red area here, sorry. This light red area here is based off a liquidity candle. So if you watch my previous streams, you'll see that once a liquidity candle high is broken, that level is no longer going to hold. This supply zone is no longer going to hold. Price is going to shoot right through it. Keep that in mind. So okay, so this is a liquidity candle. So if you go down to the lower time frame, I think maybe on the 30-minute or the 15-minute. Yeah, on the 30-minute, that's a liquidity candle, right? That high is 57.61. Price has broken above that high here. This high is 57.74. So once we break that high, this supply zone is no longer going to hold. Price is going to shoot right through it. So let's get rid of this. Let's put this label to the side. Let's look at the H4 again. Okay, on the H4, we've just got that, but price has come straight through it, but hasn't broken through it yet. Let's look at the H1. Maybe narrow that level down a bit on the H1. Yeah, there. Okay, and here. Okay, Now, let me explain what I did. So the high stays the same. That's the top of the range. So what I did was I went on the, because the 4 has been, prices come deep into the 4, I went down one time frame and I looked on the 1 hour. So we have a base there, right? So you can see that's a rally. These are all base in candles, and then you can see the drop down. Okay, so I'm going to take it to that candle, this base here. So drop, this single base in candle, and this drop, drop, base, drop. Okay, so this base 253, 2.53. Okay, so that's the H1 supply that we have right here. H1 supply. Where did my label go? Okay, it's okay. Right. I hope that's clear what I did. It was a 4 supply zone. Price has gone deep into it, so I went down, but it hasn't broken through it yet. There is no more liquidity there for sure because price has taken out the liquidity candle already. So there is no liquidity there, but still there is supply there. Okay, there's a difference between liquidity, having liquidity, and a supply zone. Right, there's a difference between the two. There is a supply zone because price hasn't broken through it yet. It will, but it hasn't done it yet. So we still have to draw the zone and we have to keep the zone. But they but there may not be any liquidity in that zone because the liquidity candle price is broken above that liquidity candle high, which I showed on the M30. Okay, so on the 1 hour, that's the zone that we have. This is H1 supply. This is H4 demand right here. Now let's clean up these zones. So this open is 340, 340, 39, 340, 39. Okay, 44, 44, 475. Okay, and then we've come into this zone here. $455 and this low is $475. Perfect. Okay, this is what we have. Would extend these also to the right. These light green areas that you see on the chart are liquidity candles, right? That's usually where I wait to take buy or sell orders. So if it's a light green area, then that's where I wait to take for a buy order. If it's a light red area, rectangle, light red rectangle, that's where I wait for a sell order. If you've watched a couple of the streams, you'll see this is exactly what I do every day, right? So this is where we have H4 demand, H1 supply here. I'm looking to buy in this area, I'm looking to sell up here, but I'm not looking to really sell today because we're very bullish. Price is pushing up, right? It's trying to push up, but got to keep in mind that this daily candle has no bottom wick. So price could come down, create a bottom wick or grab liquidity. They're both the same, and then head up, okay? Because there's hardly any bottom wick on this daily candle. Okay. Okay, so the next step is let's see which ones are high liquidity zones and which ones are not. So this one is a high liquidity zone. We had already marked this. Let me just bring that label across here. Is this a high liquidity zone? Yes, this move up here, rally, base rally, has taken out this supply. There was a rally, base, and a drop here, that invisible candle, right? The gap. The gap or the invisible candle, whichever you want to call it. The rally, base, drop. that zone was taken out by this move up. So this is a high liquidity zone. It's going to move that up there. Was this a high liquidity zone? We'll have to check on the 1 hour time frame because it's not clear. So there is supply there, rally, 2 basin candles and a drop. And this zone that we've drawn here took out that supply. So that too is a high liquidity zone. Okay. And this is obviously a high liquidity zone because it took out this supply right here, right? And this supply right here. So there's a supply zone here. This move up, base and drop. And then again we have a move up. There is a 30-minute base there and a drop. So this move up here took out this supply and also this supply here. So 3 supply zones taken out by this move up. So this area is a high liquidity zone. This H4 demand zone here, this we are about a 73 pip zone. That's a high liquidity zone. This is a high liquidity zone. This is a 135 pip zone, and this is a high liquidity zone. This is a 42 pip zone. Okay, right. Is this a high liquidity zone? This H1 supply? No, it's not taken out anything to the left. There was some demand here. Price pushed down and took that out. Yeah, it is a high liquidity zone. Yes. So there is demand right here. Right? There was demand right here, not is. There was demand right here. Okay. So on the 1 hour, you can see a drop and then a rally up, right? If you look on the 30-minute, you will see a basin candle, which is that. Okay. So that was taken out by this move down, and price already has come here, making this a high liquidity zone. Okay, making this a high liquidity zone. Right? There is demand here. Yeah, price took this out, came tested this area. We've come and we've retested this area now. Yeah, this area hasn't broken yet, so I'm going to still keep the high liquidity zone label. We haven't come through to that area again because this low here, this candle broke this low again. This low was at 637. This low is at 634. Right? This low broke this low, so I'm going to keep that high liquidity zone label right there. Okay. Yeah, there was demand here. I took it out. Even on the M30, there is demand. This took it out. This is also a demand zone. And this supply took out that as well. So that's still a high liquidity zone. I'm going to keep that. Okay, so we'll delete this. Does that make sense? Drop, base, rally. This supply took out that. You can see this low has broken below that. So we're going to keep the high liquidity zone label there. Okay, let's move along. Okay, those are our zones for today. Prices heading up. Got about 100 pips away here. Okay, so now let's inspect what price has done for the day. We do this every day. What price has done in the Asian and the London sessions. Okay, so this price, the market opened right here. Then we came up. Yeah, there is an Asian low here, just under this candle. This is the swing low. That's the Asian low right there. Then we went up. Yeah, that's the Asian high right there. Then we push down. Okay, so the market opened here. market opened here, right here. Prices was very bullish. We pushed up, we pulled back, created the Asian low. This line should be at this candle. It doesn't matter. It's just one pip. Should be 1 pip below at this candle. That's okay. The indicator just draws it from this start time, not this. That's okay. And then it pushed up 163 pips, created the Asian high into that supply zone, pushed down, came back to retest that supply zone that it created there. Okay, this is just before the London Open, pushed back down, came back in the London session to retest that supply zone and created the London high here. So that high and that high, they're almost the same. So that is at around 2656.5, right? That's a London high. Okay, that you can see LNH, that's a London high, and pushed down, created the London low, and then has come back, retested the London low, broken below the London low. Okay, so in the London session, we've traded about 100 pips, and in the Asian session, about 164 pips. Prices moved up and has ranged here in the supply zone. It's tested the London high twice and not broken above it. It's come down and tested the London low, retested the London low. Very similar to what we did yesterday. So price technically should head back to the London high. And once we close above here, we should head to the Asian high, and once we close above, there shouldn't be anything stopping it. Once we get here and close above, we should just head up, but we have no information on the left. We don't know where price is going to turn. Okay, that's the problem with trading at all-time highs. There is no information. Unlike here, when we were trading yesterday and on Friday, there was a range to trade inside of this range, 500 pip range, right? There was thing we could read price action. Once price gets up here again, there is no price action to the left. There is nothing. Once it gets up here, there is nothing to the left. So we don't know what's going to happen, if it's going to continue and how far it's going to continue, where it's going to reverse. There is nothing, no information on the chart. It's just guesswork. And I hate doing guesswork. So we're going to have to wait. Can't take any sells here. Price is heading to this London high. We've rejected the London low. We are heading to the London high here. We can't take sells in this area because the liquidity candle price is broken above the liquidity candle. So we should be on the high, on the bigger picture. I don't want to use the word high time frame. The bigger picture is the liquidity if this zone is gone, right? The liquidity of this zone is gone. This was the liquidity candle right here. This candle. If you look at the 30-minute, it's that candle right there. All right? That's a 60 pip candle. That was the liquidity candle. That's the candle that holds. If there were any sell orders, that was the candle that held all those sell orders. That candle right there. And you can see when price came there, how it reacted. It did come to it, and we dropped about 100 pips. Over 100 pips, right? From that candle, it dropped about 109 pips. Now that candle's gone. There is no price has broken above that candle. So we're heading towards the London high because we've rejected the London low. We're heading towards the London high. We should cross it and continue higher. So I can't take sells here and I can't take buys here either because this is chasing price. For me to buy, price needs to drop back to this area for me to be able to take a buy. So I'm going to have to wait and do nothing because I don't chase. I want price to come to me. So price needs to come to me, come to my zone to be able to take. So we're going to take a closer look at this zone in case price does come to this high liquidity zone in the next couple of hours. Where can we take buy entries in this high liquidity zone? So this zone is based off of that base rally. Inside that, I want to inspect further and see if you have a liquidity candle. So that's a candle right there, but not too big. That candle's bigger. Let's look at the 30-minute time frame. Okay, that candle right there, that looks better now on the 30 minutes. But it's got no bottom wick. Okay, let's look at that's a 30 pip zone. There's no point going further. Okay, so I'm going to mark that candle right there. 450, 134. 134. Okay, so that's about a 30 pip zone, right? Just look at the 15-minute. Yeah, so that's a good candle there. That's a very strong bull candle right there. It's a good candle to trade off of. So if price comes there, I very likely take a buy entry there. Zone will probably be about a 33 pip zone. That will probably stop loss probably under that candle right there. This is a little too wide. 50 pips is too wide. So if I take an entry up here, stop loss will be under here. If price comes deeper, so here's what we're going to do. I'm going to put an entry up there. The high is 450. Two 272. And this candle right here. Okay, this candle right here. Nine nine three 189993. Okay. Yeah. So that candle is that wick basically. Perfect. That's a liquidity wick on the 30-minute, right? That's a liquidity wick and that's a bullish engulfing candle. Perfect. These two candles are the areas that I'll be looking to take buys if you get there, right? So let's bring this down here as well. Entry here. Open 208. 208. Slow 134. It's a bullish engulfing candle right there. And it's a liquidity wick and a bullish engulfing on the M30. Right? Perfect. Okay. So those are 4 entries. 274450, 2742.7, 2742, and 2740.9. Okay. Uh, on these entries up here, if I get in here, I'll manage risk if price comes below this. On these entries below, I'll manage risk under this candle or here, which is about a 27, 28 pip stop loss on these entries. On this entry, I don't want to hold this trade if price comes further down. I'll manage risk on this entry here and on these entries under this, right? So that my stop losses always stay around 30 pips, basically 30, 35 pips. Okay, 30 pips. This is 30 pips, perfect. And these entries here is about 22 pips, 25 pips, perfect. Okay, so that's the area I'm going to buy. Now, price is in supply. Price is in supply. We've broken one high, another high. Price is in supply, and there is a liquidity candle here. This is a high liquidity zone. That's a candle right there. So we have to mark that candle. We'll just follow the rules and mark this candle right here. 561012. 561012. Okay, so that's a 55 pip zone, too big. Yeah, that candle right there. This low is 5209. 5209. Okay. Okay. I've got to mark these. May not take sells here, but I've got to mark this. Open 464, 464, 246, 246. Okay. Right. That's a liquidity candle. We've broken a new low. We have no bottom wick. Not convinced about the sells. Let's see. I'm not fully convinced about the sells. But we could get sells here coming down. Push price down. I'm just going to watch this area. I'm just going to watch this area. I might not do anything. Just going to watch this area. So what I want, if I'm to take sells, here's what I'm going to do. If I'm to take sells, price has rejected the London high once already here. If we come back here into this light red area, reject it again. If I see a M15 candle uh, like this, or a rejection candle, or a pin bar, or an engulfing candle here, then I'll take sells. Yes, that'll be a little late. It'll not be a tight, there might not be a tight stop loss, But the idea is to come down to this demand here, right? So we still could get a 75, 80 pip trade coming down, depending on where that 15-minute candle closes. That's what I'm going to do. I'm going to wait for more confirmation. Okay, we do have a liquidity candle here. I'm going to see what happens if price comes, creates either a better 15-minute. 5-minute is also okay, but better 15-minute a liquidity grab or a 5-minute liquidity grab to push price down up to this demand level. That could be a potential 80 pip drop. That's the only way I'll take a sell. Otherwise, I'm not going to place any pending orders here. Okay, done. Now, let's look at the next level that we have. That's one demand level that we have, 4 entries. Let's look at the next one. If price comes deeper here, where can price reverse or react? This candle right here. This candle is a liquidity candle. Closed above, it's a bullish engulfing 4-hour candle. It's a very big candle. So obviously 155 pip candle. I'm going to draw that zone. So we have to now narrow that down. In that candle, this is big. These levels are covered here. Let's go down to the 30-minute. This candle right here. Still a 69 pip candle. Still a 69 pip candle. Let's go down to the 15-minute. Yeah, that's much better. That's much better. That candle right there. Okay. 748, 283. $460. One, three, four. This is yesterday's NY session. Price did come to it. I don't think it's coming there again today. It's unlikely it's coming there again. But we're going to mark it. $288. 198 788 788. Okay, so in the eventuality that price does come there to this larger high liquidity zone, which is about 134 pip zone, there are two smaller light green zones inside that. Okay, in that's one liquidity candle, and then that's the other liquidity candle. It's clear on the 30-minute. This one, that's one liquidity candle right there on the 30-minute. Let me zoom in. That one right there, 30-minute. And then this candle is also on the 30-minute, but it's too large, so we'll have to go down a time frame. 15-minute, that candle, right? This zone is on the 30, this one is on the 15. So in that zone, entry here, and then entry for this zone, there's an entry here and an entry here, and maybe an entry here. It's a 50 pip zone, we take it, and that's a 46 pip. Yeah, so manageable. Stop losses under those zones. If you take those, if you take those entries, then the stop loss would be under there. If you take these entries, stop loss would be under there. Okay. Right. Covered. Okay. Just give me a second. Okay, so a few 30 seconds for the 15-minute candle to close. We've broken the high. Usually what I do is once we get into a zone like this, once you break two highs, I would draw the fib and take a trade. But here, because the liquidity candle has already been taken out, the one that I showed you on the 30-minute, I have to wait for confirmation. So there is a new liquidity candle here. I want to see a 5-minute or a 15-minute liquidity grab like this. We've already broken this high. I want to see something like this to trade. I'm not just going to take an entry just because price comes up here. I'm going to wait for confirmation. The deeper it comes, the better. If it comes deeper in and gives me a 15-minute confirmation, then great. We might get a 80, 90, even 100 pip trade, price coming down. Without that confirmation, I'm not going to sell. Because price might break right through this, because the liquidity candle, the previous liquidity candle on the 30 minutes to the left here has already been taken out. So on the, yeah, so I want to see a candle. I want to see a candle, and then we'll take it down. So what I just did took about 40 minutes because I talk over what I do. Usually that should take about 20 minutes, half that time. And that time is very important. That's the prep work that you have to do every day before you start to trade. It's so important. You just can't come to the chart and just randomly throw an indicator on the chart and just buy or sell. You have to do your prep work and then have a better understanding. So you have an understanding of what price has done and what price might do, and then wait for price to come to you. Once you draw your zones, to take your entries. Now, does that mean that you're going to get a right trade or a winning trade every time? No, it doesn't mean that. It just means that you follow a certain process that has led to a certain kind of result more often than not. That's all it means, right? So this is my process, right? There are different traders who have a different process of how they do their prep work. This is how I do my prep work. I draw supply demand zones. I identify high liquidity zones out of those supply demand zones. I see what price has done in the Asian and the London session, so I can anticipate what price might do in the New York session. And then I draw support resistance levels on the M15, right? But to do that, I want to see price react to something. If you have a reaction, then I know, okay, price is coming down. We can draw support resistance levels, maybe look for a trade. Okay. We should get a reaction here. 30 pip zone to push price down. We should get a reaction here. I'm going to pay attention to this. If you break this high, then that's it, right? Because price has tapped into this. This candle has no top wick. It's 5-minute candle. That's also the 15-minute candle. Yeah, so that's a 15-minute candle, and the 5-minute candle has no top wick, but price has tapped into it here. So this open is 665 and this high is 6663. Yeah, so we have tapped into that no wick, grab liquidity, and we push down already, creating this liquidity candle. So if price comes here and if it breaks this high, then we're heading all the way up. So if a sell trade needs to work to come down 100 pips, then it cannot break this high. Right, this high is 56.63. Let's put a, so if I do take a trade, that's going to be the stop loss 56.63, just above that. Not exactly at 56.63, but because you need to account for spread, but just above that, okay? And here's where I want to see a reaction. So that's a 30 pip zone, which is fine to push price down, but we are very bullish. So I do want to, yeah, I want price to come deeper, tap these areas. And I want to see confirmation. I want to see a 5-minute close, a strong close like this, 5-minute close out of candle like this from this area to come down. Just means that I might get a bad price and I might have a wider stop loss. But I need to see that confirmation to take a trade going down. And if I do get in on a trade, take a very small position. $93, $37, maybe $40 there. Yeah. Then we're coming down here. 65. See that? Let's see how this candle closes. Let's break the high. No, it didn't. Perfect. See how the 5-minute candle closes. Three, 4, 7, 1, 2, 4. 3, 1, 3, 4. Okay. Yeah, I'm gonna wait for the 5-minute candle to close. I don't like the fact that this candle is a bullish candle. It's a very strong bullish candle. This is probably creating a bottom wick to head up. It's got to wait for the 5-minute candle to close. I want to see how this candle is going to close. We are pushing down. Depending how this candle closes, it could be a liquidity candle. Grab liquidity from this candle right here. You can see it almost touched. High is 53.50. We're at 53, I think 53.49 or 53.48, 47 something, and it's pushing down. This is that liquidity candle, that's what we have drawn. On the 15-minute, we've tapped this area. This close was 52.46. 52.46 for the 5-minute. Now we're pushing up. Pushing up. Pushing up. It's no top wick. It's too wide. It's gonna wait for. It's gonna open one small position here to come down. It's coming straight down from that candle right there. 2752.4 or 2752.5. Almost came to 2753.5, pushing down. The idea is price comes here. Back to the London 30 pips. It comes further down to our demand zone right here. It's 51 pips. If price breaks this high, I'm going to manage risk on these trades here. $25. This candle has no top wick, this 5-minute candle, so we should tap. The next candle should tap that and head higher. This candle has no bottom wick. Should come down. $56.63. $748. 30 minutes goes Georgie. We are heading higher. It should head above this. Should head above this high here. Come to this candle deeper into this. Taken very small positions, so if we do come above this, obviously I'm going to close my trades, but very small positions. The idea is for price to drop to this area right here, to 745. That's the idea, to 745. Yeah, so we should come and break this high. Let's see. Two things can happen. Price can test this area, not break this dark red high, and before it breaks it comes down to demand and then go up, or It can go up right now, break this high, close back in, and then come down. Probably later, after the NYSE open. Both those scenarios are possible. Obviously, I would like price to drop now. The price can easily go up, break above this light red area, this dark red area, close above, and then close above, then close back in, and then come down, right? Or it can come down now and then go up. So either way, we got to manage risk because we don't know which one is going to happen. So when price comes up here, I'm going to close these small orders that are here and manage risk and keep my loss to as small as I possibly can. If you do come down, then I'm going to hold the trades, these small positions, to this area right here. 75. Yeah, we are pushing higher. We should push higher. We should push higher. We should push above this. But I'm going to manage risk only at the top of this candle. Because if price does come there, I'm going to add maybe 2 more small positions here. And then if we do come up here, then I'll close these small positions, add 2 more small positions here, and wait for price to come down. If you break this high, obviously, then I'm closing everything. The idea is for price, since we do have a liquidity candle here, price to push price down 70, 80 pips to this demand zone right here. Okay, let's look at 15-minute support resistance levels now, since we've taken a trade. No good to grab yet. I like that 5-minute candle. Let's see if we can come down. 10:30. We should come to this support here. And if we close below this support, we should come here. Right? But we did also grab liquidity from here. Yeah, we're heading higher. It's a liquidity grab to go up. Yeah, it's a liquidity grab to go up. Yeah, I'm closing these trades. Once we close bullish here, we should break this high, and we're heading higher. Yeah. Yeah. Yeah, I'm not holding these. These are wicks to push up. We grab liquidity from this support level to push up. On the 5 minute, on the 1 minute, as price is pushing up. There's no need to hold these trades. We're going deeper into this. I'm not. I hate holding drawdown. Mhm. We should break this high. Should break this high. Let's get rid of that. Yeah, we should break this high and we should head deeper into this level. Maybe if I get a reaction here, if I see another liquidity candle here, a liquidity grab here, I'll probably take sells, but no. No, this is just no top wick. We should be heading higher. No, it's not worth the drawdown. Not worth the drawdown. It's just not happy with these SR levels. This is okay. And yeah, we're heading higher. That was great. A bottom wick, we're going up. Good close. Good close. Lost about 0.25%. Risked about 1%, lost about 0.25%. Always manage risk, always lose less. So the sell idea for this candle to hold, I gave it one shot. I gave it one try. I didn't like the way candles are closing, so I closed it. But the candle is still valid. If you come deeper, I might give it one more try, and then that's it. This is okay. This 28. 'Cause that's better. 364. 313. 37. 33. 20. Let's see where this leads to. Yeah. Heading high. That was a good close. That was a good close. So we broke this high. We broke this high right here. We're heading deeper into this candle. If we do get a reaction up here, I'll probably take a trade. But the last time we closed above, we head straight up. That was in the Asian session. We went straight up here. So it's unlikely that price is going to, this area is going to hold. That we're probably, if we do react, we should react close above this support, this resistance, and close back below. That's what should happen. There is a reaction there. Yeah, I want to wait for 5-minute candle to close. 30-minute candle closes in 7 minutes. That's the 1 hour close. Yeah, let's wait for the 1 hour close. Let's wait for the 1 hour close. 7 minutes. No rush. Let's wait for the 1 hour candle to close. Okay. Let's wait for the 1 hour candle to close. 30-minute candle close, 7 minutes. 15-minute candle is going to close. Let's wait for another 7 minutes. Yeah, that's better there. So that's 39 pips. It's also about 39 pips. Yeah, that's perfect. And then that should be lower. Yeah, 25, 5, 75. Yeah, that's good. Roughly about 38, 39 pips between each SR level. That's perfect. Now let's look at this area. Again, 1 minute, 5-minute is a doji. 1 minute did react. We did touch that area. We did tap that area. I'm gonna take one small position right there. We tapped high 52.50. Yeah, did tap that area. So wait 4 minutes for the 15-minute candle to close. Let's see if you react, if we reject this area, and the 1 hour also rejects this area. Closes below this resistance right here. Yeah, gonna wait for the 15-minute candle to close. 3 minutes. The idea is still the same. Price tested the London high twice, couldn't break above. We came down, we broke below the London low. We're coming back to test this area. There's a supply zone right here. We did tap that supply zone, come back here 60 pips, and then further down 70 to 80 pips down. That's the same idea. Price to drop about 70, 80 pips. But we're going to wait for the 15-minute candle close. I want to see a close, a strong close from this resistance. This is the correct resistance. Liquidity grab. If you draw the resistance levels correctly, you will see the correct liquidity grabs. That's the correct liquidity grab there. That is why I took that order from there to come down. But I want to wait for the 15-minute candle close, which is going to close in 2 minutes. And then add on the risk that I took off. Add that risk back on for price to come down. We ranged in this, we closed, we range in here, we close below to come down. We range here and then we come down. One and a half minutes, let's see. Yeah. I'm just going to take another position here. So this high is 352,964, 35963. Yeah, we're coming down. We're coming down. We're coming down. Coming down. 921. 352. 352,909. 909. And this low is 904. Still coming down. 4901, 352. 4901, 352. Okay. Yeah. Now we're coming down. Let's leave the 1 hour candle closed. Yeah, we closed 30-minute close bullish, 1 hour closed bearish, 30 minutes closed bearish. See if we can come back up here. Five. 72. It's 275. Yeah, it's coming down. 2745. So here's what's happened. 5-minute candle closed at support. Next one closed back inside, heading straight up. If a 5-minute candle closes above this resistance, I'm going to manage risk. I'm going to close some of these positions here. Because if we close above, then we're heading into this range. We're heading into this 20 pip range of this 5-minute candle, which is a part of that liquidity candle right there. We close above, we're heading into that range, 20 pips. Let's see. We're very bullish. This is a counter trend trade. It's not advisable, but it is a counter trend trade. Yeah, I'm going to be managing risk on this trade. We're very bullish. Whoa. We broke above the high. Let's see if we close above. back down. The idea is for price to drop here. That's the trade that I want to take. Price to drop here, then to look for buys. It's a counter trend trade. The trend is bullish for sure. For sure, it's bullish, but it's a counter trend trade to drop price here, so we can take buys here. I can take buys down there in demand. The buys might come later on, because remember, this daily candle has no bottom wick. It's gotta wait, gotta wait. Still heading higher. We're heading higher. Heading higher. Let's see the 5-minute candle. I want to see where it's gonna close. If we close above, there is no point in holding this trade. We're heading much higher. I think we lost about, what was it when the session started? What was it? 1.15% maybe. Yeah, 1.15. Total lost about 0.9%. Yeah, we are heading higher. Just gonna wait for this 5-minute candle to close and then close the positions. No top wick. Yeah. Yeah, don't see a point in holding this. 5-minute candle is closed above. It's very bullish. This was the candle that I did take. It dropped 50 pips, but then went straight up. Yeah, I'm just closing everything. I don't want to take a counter trend trade here. So yeah, for the day I lost 0.1%, 1.13%, because I had made some gains in the Asian session of last night's trade that I held overnight. So total loss for the day is about 0.1%, which is fine. That's absolutely fine. So yeah, so this didn't work out. Gave it 2 tries, didn't work out. That's it. That's it. We're very bullish. I'm not going to try to sell here at all. Can't. I was hoping to buy here, but there's no place to buy. There's no chance to buy. There's no liquidity candle to buy from. This is in the middle of nowhere. There is no, there's nothing. Rejected. We're heading up. We're heading straight to the London high. Straight to the London high. We did come here, retest this area. We're heading straight up to the London high. Yeah, maybe this was the buy. This liquidity grab probably was the buy. Rejected the London high, heading the London low, heading back to the London high, and the Asian high. This probably was the buy. Here, this candle grab liquidity, head straight to the London high, which is about 70 pips, 75 pips. Yeah, we're going right through this zone, right through this candle. Should break it now. Once it breaks this high, this is also no longer a high liquidity zone. Maybe later on, after the 4-hour candle close, there might be an opportunity to come down, or maybe it comes down and goes up. But right now, I don't want to sell anymore inside this light red box. The liquidity of this candle is gone. It's done. We've come deep into it. We're going to break. The next candle is going to break this high and break this red box and continue to the London high and then the Asian high. So if you go above, close back in, and then start to come down, then we're creating new liquidity to come down. If you close back up, if you close above, close back inside, and we push down, then that's new liquidity. Yeah, we broke the high. See, done. So liquidity of that level is over. It's no longer a high liquidity zone. That was the candle. It's done. Now we're going to break. We're going to go outside this box. We're going to go outside this box. It's 26 pips. We're going to go outside the box. Yeah, we've broken this M15 low. We're heading up. I just don't like taking buy trades in the middle of supply demand zones. It has to be inside the demand zone for me to have taken a buy trade to go up. That was the better RR trade. Here, it's smaller, like how when I took supply, when I took a sell trade, it was from inside here to come down, about a 80, 90 pip move down, 70, 80, 90, even 100 pip move down. But if you try to chase price from here in the middle, going up, you're trading straight into supply. We're going to break this high now, and then we're going to continue higher. Because there is no liquidity in this zone anymore. In this, absolutely no liquidity. It's done. There is no liquidity left. The liquidity of this zone was actually taken out in the Asian session when this candle broke the liquidity candle high. This one right here, and I showed that in the beginning of the session when I was doing my analysis. I showed the M30 candle, that this candle, the M30 high that this candle took out. So once that was gone, there was no liquidity, but price created new liquidity with this candle. So I was hoping that this candle will hold price like it did, hold it below resistance, hold it and push it down. But the high time frame is too bullish for that, and it did push price through. So we gave the sells 2 tries, and that's it. Now it's very likely that I don't get a trade within my trading hours. Let's see, I'm going to be here for probably another 40 minutes, 30 minutes maybe, 30 minutes. The NYC session is going to open in 15 minutes. So what has happened so far is that price pushed down in NY session to grab liquidity for NYC to push up. So we could range a bit and then continue higher. So what I would want to do is to trade the pullback to go higher, to go up. That's what I would want to do, because price is creating a new high, right? If we're creating a new high in the NY session, so I want to wait for the pullback to retest the high and then go higher. That's the idea. We're going to break this, we're going to close above this resistance right here and then break the red, this dark red box. All right, price is going to do that now, either this candle or the next one. So this is a liquidity candle right here, this one right here. I'm willing to trade that 38 pips to go higher, possible. It's a risky trade. It's a risky trade, but market's very bullish. The market's very bullish. $6.14, 828. Let's just take a look at this list. $21. It's 80 pip candle. It's a liquidity candle, a bullish engulfing candle from 2750, which is also resistance level. I said this at the beginning of the session. That's 80 pip 15-minute candle. That's better. This is better right here. Stop loss under this candle here. Possible. It's possible. Pull back to this level here to continue higher. Once we break this, which is going to happen now, I'm going to delete this red box. So then we have just, we have no supply above, absolutely no supply. And we just have a liquidity candle from a 1 hour demand level. This candle is going to close in 39 minutes. So you'll have like a 4 hour demand level right there. We're going to break the high now. Once you break this high, this candle high, this supply zone is going to be taken out. I'm going to remove this supply zone. And then in 39 minutes, the 4 hour candle is going to close. We're going to have a pullback and then continue. So it's a risky trade, but I'm willing to take this trade. 214, close to 13. Okay, right there, and also there. 313. Okay. High 50.36. But this high has to break. Until this high breaks, I'm not taking any, going to take any buys here. It's going to break. It should break now. Once this breaks, that's when I'm going to be looking for buys here in these level at the bottom here. The 50.36. 50.36. It has to break. The high has to break first. It should. Yeah. Yeah, that's a decent candle. 36, 37 pip candle to trade. Yeah, so we rejected the um, London low. We pushed up to the London high. 5 minute has closed above the London high. This is the pullback. This is the pullback. Yeah, let's see. So this is, we're just pushing. There is no, it's not going to create a new low. The daily candle, we're just pushing above this high. This high is 845. This high is 774. Yeah, we should break this. It's just a few pips. It's just 10 pips, less than 10 pips. Okay, so this is probably the pullback before the NYSE push up again. So pre-NY pushed up, NY came down to grab liquidity, pulled back. Then NY session continued higher. Now probably the pullback to continue further higher. We created a new high in the NY session. So the idea is a pullback, create some sort of support on the M15 or M30, preferably on the M30, to go back, retest the high, and continue higher. Okay, that's the idea. Yeah, I want price to come deeper to this support here or lower to go up. We've closed above. 5 minute has closed above. I said this yesterday. 5 minute has closed above, but we haven't grabbed liquidity on the 1 minute yet, or even on the 5 minute. Okay. $37. Sorry, 58. So idea is for price not to break this low. This is a liquidity candle. The 30 minutes is just about to close. The close should close above this support to continue high to trade into this wick. 15-minute has closed above. This low should hold. The idea is stop loss under this. Take buys here or below to continue up here to 2758. About a 50 pip. If we get here, then it's about 50 pips. It's about 46 pip, yeah. Price has to come down though. Yeah, we should close above 2754. 2754. 2754. 275450. Low is 637 and this low 634. It did good liquidity. Okay, that's one out of there. Team. Low 4028. 614, 828. 614, 828. 2764. 2764. 27. So that's a TP right there. 103 pips. That's where I'm anticipating price. This is the fib I've drawn in of this liquidity candle right here. Should push price up and should head up here. Okay, that's the idea. Stop loss just above under this candle. And I'll have a final TP at 2771. 2771. Okay. It's 200. Is it 300? 5. Okay, let's see if this works. 15 minutes has closed the doji. Price come, grab liquidity from here. There is nothing to hold price down, push price down. The liquidity in this zone is all taken out. So we should head to the fib level 2764. If we close above that, we should head to 2771, right? So that's final TP there. That is 180. Yeah, we should head there. Yeah, okay. Let's see. Okay, I'm also going to end the stream in about maybe 15 minutes, 20 minutes, because I've been here for over 2 hours now. 15, 20 minutes going to end the stream. But that's the idea. Stop loss under this candle. Entries here. As you saw that I took entries right from this support level. We had a rejection on the 1 minute, perfect. So I took my entries right here at the wick of this candle. And then anticipating price to head to 2764, which is about 111 pips to the first TP. Second TP is about 180, 190 pips. Okay, to 277.8. That is the second TP, 277.8. Yeah, we're heading higher as expected. So this is the NYSE open. We did pull back, we're heading higher. 2764 is my first TP. I would have loved to get in more buys here, but price didn't pull back enough. I would have loved to price to pull back to this level right here, 2752. But we didn't pull back because this is the reason there is supply right there is a, I mean, demand zone right here. But we came to this demand zone, this rally base in candles. So there's a rally here. This is the rally. 1, 2, 3, 4, 5 base in candles, and then the rally, base rally. So price came and touched that demand zone perfectly. I did take an entry right there. You can see that entry right there. anticipating price to come to 2764. Okay, stop loss under that candle. That's about 47 pips. That's fine. Very small positions. Okay, all right. I'll be back in about 5 minutes. I have about 50, yeah, about 6 minutes for this candle to close. I'll be back in 5 minutes. No top wick. 5 minute closed just at closed right at the Asian high and also closed at resistance. No top wick. We should push up. It's all dojis. We should push up. It's also we're getting to the 4-hour candle close. So the 4-hour candle should close above this resistance right here, okay? This resistance. So just like I say every day, just before the 4-hour candle close, before I end the stream, I just say where the 4-hour candle should close for us to continue either higher or lower. So there is 4-hour resistance right here. Price has to close above this. See this resistance level that I've drawn? We have to close above that to continue higher. Okay. This is not an issue. This is a wick. We've already traded into that wick here. We've traded into that wick here, and we've broken that wick here with the third candle. So that's not an issue anymore. That wick shouldn't pose a problem anymore because price has traded once, twice, 3 times into it. But it needs to close above these body closers. There are body closers here. There's a body close here, 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 which need to close above those body closers, which is around 2753. We need to close above 2753 to continue higher. Right? We are pushing up now. So price did come down, grab liquidity. There was no top wick, so we are continuing higher. We should break this high, and we should continue higher. TP is 2764. That's a TP. First TP 2764. Next one, we're getting very close to 2764. Next one, 2771. Let's just look at the daily candle. Yeah, I'm gonna move this one to 7-1 as well. Yeah, it's better. We got news now, so it's not an important news event, but anything can happen in news. Anything can happen, right? Price can just shoot straight through and then stop me out. So that is why these are very small positions. If I do get stopped out, it's not a big deal. I'm not going to blow my account or anything. It's just going to be a very small loss, and that's fine. It's just the beginning of the week. But price can also push, carry price into these TPs also, because with news, right? 50-minute candle has closed above. So we've closed above the Asian high. We've closed above this resistance right here, which is great. And we're pushing up. Let's get rid of all of these blue lines. We don't need any of them anymore. 71.5. Yeah, we're pushing straight up. So I've got one TP, first TP there, 103 pips. Second TP here, 187, 190 pips. Say 190 pips, right? 190 pips is second TP. The idea was explained. That was a liquidity candle. That's why I've drawn this. I placed the entries. They were all limit orders. I placed limit orders. So if you want to call these signals or entries, setups or whatever, you can call them whatever you want. I placed the TP. TP was under this. Stop loss was under this. I placed a stop loss just under that candle. TP levels are placed. Everything is placed, so that those who are watching can earn while they're learning. That's another reason for the streams. You can, while you're learning how to read price on a price chart, you can also trade a small account and take the same trades that I do. But if you are taking the same trades that I do, then you need to close trades when I close them. You need to manage risk when I'm managing risk. You cannot hold drawdown because I don't hold drawdown. You got to do exactly what I do. So if I close a position, if I close a partial position, if I close a full position, when price is in drawdown, you have to do the exact same thing. Let's take a look at this news event that's about to pop up. CB consumer confidence. Expecting good numbers. Good numbers might just push price down. Bad numbers will continue price up. They're probably going to get good numbers, push price down, and then might just continue this high time frame bullish trend up. That's what I'm hoping for. Push price down and then continue higher. Got 11 minutes for news. I'll be here for news. I'll be here for news. Soon as the news event comes up, and that'll be the close of the 4-hour candle as well, then I'm going to end the stream, right? So we're up about 0.8% so far. 0.9%. Just about hit TP1. Just 6 pips away from TP1. Almost there. This is why it's so important to manage risk. Because I manage risk, my loss was very small. So if this does hit TP1, if it does hit all my TPs, then I'll be positive. If it doesn't and goes down and gets stopped out, then I lose. I lose what I lose. I lose a small amount. Because I've taken very small positions, very, very small positions. I can't take any smaller than this. It's 1 micro lot. I can't take any smaller positions than this. So if I do, so this is not over risking. This is not over trading. This is just taking calculated risk uh, and anticipating positive RR trades. Right? We're almost touched TP1. Just about a pip away. Should touch it. Where are we? The high is 87. Yeah, we're just 1 pip away. Yeah, so that's TP1 hit, 2764 to the pip. We hit that. And now we are 0.2%, 0.2% in profit for the day instead of being in a loss, continuing to be in a loss, right? So if price comes down and does stop me out on this trade, I'm going to just leave this trade as it is. I'm not going to do anything. If it comes and stops me out, then I'll lose like maybe about 0.2% for the day. I'll probably lose 0.2, 0.3% probably. 0.3 or 0.4% maybe at the most. That's all I'll lose. And that's fine because my risk, the maximum that I'm willing to lose for a day is about 1%, 1.5, even up to 2%. That's the max loss for the day. I'm not willing to take any more than that. So if I do have a day that I lose about 0.4%, 0.5%, 0.6%, that day is still a win for me. So we tapped 2764. You can see how precise these fib levels are. I have in the past on a lot of streams, I've shown how to draw this fib, what are the values, the settings of this fib. So we did touch, if we close above, if a 15-minute candle close above, then we're heading to this, right? Now that we have touched this, price can pull back, right? It can pull back to this level. If it pulls back here, I might just take another entry. If you pull back here, I may take another entry right here, somewhere in this area. I might take another entry. Let's see. But I'd like to see a 15-minute candle close above this and then a pullback. The 4-hour candle is very bullish. Very, very bullish. We're heading towards this 190, 185, 190 pips. 2771 point, 2771 or 2771.8. That's where we're heading. That's my final TP on this trade. If news pushes price down, I just might take another entry. 4 candle is about to close. Let's get rid of this. We don't need this anymore. We've closed above. We might come down to tap the London high or the Asian high to continue higher. That's possible. Price might drop, push back another 70 pips, 75 pips, and then continue. So I might take a very small position here to come back up here. But I'd like to see a 15-minute candle close at 2764 or just above it. So price didn't pull back to this level. It didn't today. It's anticipating price to pull back. It didn't. It just continued up, created a liquidity candle right here. That's the candle that we marked on the 15-minute. Pulled back into the middle of that 15-minute liquidity candle. Perfectly pulled back. So the candle was about 75 pips. We pulled back 35 pips, halfway mark of that candle, and we pushed straight up 80 pips from there. Sorry, 114 pips from the halfway mark. We are rejecting this area, 2764. 5-minute, you need a 5-minute rejection, not a 1 minute. You need a 5-minute rejection from this fib level to know that price is coming down. There isn't a 5-minute rejection yet. We need a 5-minute rejection. So maybe the next candle, if it touches, rejects, then price is coming down. Okay, 3 minutes to news and 3 minutes to the end of the stream. Okay, 30 seconds for news. It's going to pull back, probably, very likely. 4 candle is just about to close. We're closing above that resistance and that resistance both, which is great. 5 seconds. Yeah, straight up, pushing up. Should get to 2771. Broke on the high, 15-minute high, but there's no bottom wick, so we'll probably come back to create a bottom wick and then go up. Okay, that's the end of the stream. So if you did take this trade, and you want to maybe keep your stop there, that's fine, or you want to bring your stop under this candle, that's fine too. But if you do, maybe you're going to get stopped out, and then price could continue, or maybe it doesn't, right? There are pros and cons to moving your stop loss. I'm keeping my stop loss right there. If it comes down and stops me on, that's absolutely fine. And my TP is up there, 185 pips. Okay. All right. I'll be back here tomorrow, same time. We'll do the analysis as usual and see if you have any opportunities in the first 2.5 hours of the New York session. Okay. See you guys tomorrow.